From Daily Forex, this is Chris. Taking a look at the dollar yen and the Aussie dollar pairs. The dollar yen got absolutely hammered during the trading session on Friday again, as we continue to see a lot of weakness, fear, etc. with the coronavirus. We are below the 200-day EMA, and we're essentially changing the trend again. We're in a bear market. Now, if we can break down below the lows of the candlestick for the session, then we should continue to go down towards the 105 level. Having said that, as we go into the weekend, there's almost certainly going to be some type of an announcement out of central banks. They're screaming for it. So we'll see. That could change everything. Rallies at this point, though, I would continue to sell. I think 110 is going to offer significant resistance. The Aussie dollar, same situation. It rallied late in the day, mainly because, because Jerome Powell suggested the Federal Reserve was watching the markets closely, and therefore they had the tools and they would use the tools necessary. So I think we may get a little bit of a pop. Should be a sellable event, especially near 67. If we break this cluster here, then I might be a buyer, but that's been the level I've been talking about for a couple of weeks now. That hasn't changed. If we break down below the bottom of the candlestick, it opens up the door to 0.63. Either way, I don't like the idea of buying this. I think any central bank action will probably only be a short-term solution. And it might even be looked at the markets as yet another thing to panic over. So we'll have to wait and see. Just so many moving pieces right now. It's difficult to come out and say, okay, it's time to buy the Aussie.